Hey everyone, welcome back to Bitcoin Dorks, your daily source of cryptocurrency news and updates. In today's video, we will be discussing the recent news from Israel's central bank regarding the issuance of a central bank digital currency or CBDC. According to reports, Israel's central bank is considering the possibility of issuing a CBDC in the future and has even created a team to study the potential risks and benefits of such a move. The bank's governor, Dr. Amir Yaron, recently stated that the decision to issue a CBDC will depend on a variety of factors, including For those who may not know, stablecoins are a type of cryptocurrency that is designed to maintain a stable value, usually pegged to a fiat currency like the US dollar. These coins have become increasingly popular in recent years due to their stable value, which can be useful for transactions and trading. However, the central bank is concerned about the potential risks that stablecoins and other cryptocurrencies can pose to the financial system. They believe that a CBDC could provide a more secure and reliable alternative to stablecoins and other cryptocurrencies, while also promoting financial stability and reducing the risk of money laundering and other illegal activities. The Bank of Israel is not the first central bank to consider issuing a CBDC, as other countries such as China, Sweden, and the Bahamas have already begun exploring the possibility of creating their own digital currencies. In fact, China has already launched a digital version of its national currency, the yuan, and has been testing it in various cities across the country. While the creation of a CBDC could potentially have many benefits, there are also concerns about the impact it could have on the existing financial system. Some experts believe that a CBDC could lead to a reduction in the demand for cash and traditional banking services, which could have negative implications for banks and other financial institutions. Despite these concerns, the Bank of Israel is continuing to study the potential benefits and risks of issuing a CBDC and has not yet made a final decision on the matter. It remains to be seen whether or not Israel will join the growing list of countries exploring the creation of their own digital currency. In addition to discussing the possibility of a CBDC, the Bank of Israel report also touched on stablecoins and their potential impact on the financial system. It noted that stablecoins are becoming more prevalent, particularly in the field of cross-border payments, and that their use could potentially pose a threat to financial stability if not properly regulated. The report acknowledged that stablecoins can offer benefits such as faster and cheaper payments, but also highlighted concerns such as the lack of transparency and the potential for a single issuer to hold too much power. The Bank of Israel recommended that stablecoins be subject to regulatory oversight to ensure that they do not pose a threat to the financial system. The report also discussed the potential for a digital shekel to improve the efficiency and resiliency of the Israeli payment system. It noted that a CBDC could offer benefits such as faster and cheaper payments, reduced counterparty risk, and increased financial inclusion. However, the Bank of Israel also cautioned that there are risks associated with issuing a CBDC, such as the potential for bank runs, cybersecurity threats, and the need to maintain public trust in the financial system. The report recommended that further research be conducted to determine the feasibility and potential impact of a digital shekel before any decisions are made. Overall, the Bank of Israel report provides a comprehensive overview of the potential benefits and risks of CBDCs and stablecoins and highlights the need for careful consideration and regulatory oversight as digital currencies continue to gain traction in the financial world. In addition, the bank said that a CBDC would be more secure and efficient than cash, as it would reduce the costs associated with printing and handling physical currency and would enable faster and cheaper cross-border payments. The Bank of Israel is not alone in its cautious approach to CBDCs. Many central banks around the world are studying the feasibility of issuing their own digital currencies, but few have actually moved forward with concrete plans. One of the main concerns surrounding CBDCs is the potential impact on monetary policy and financial stability. Some experts have warned that the introduction of a CBDC could disrupt the traditional banking system and destabilize the financial system. Another concern is the impact on privacy. CBDCs could provide governments with unprecedented visibility into the financial transactions of their citizens, raising concerns about surveillance and censorship. Despite these concerns, the interest in CBDCs continues to grow. In a recent survey of central banks by the Bank for International Settlements, BIS, 86% said they were actively researching CBDCs and 60% said they were conducting experiments or proofs of concept. As the world moves towards a more digital economy, the debate over CBDCs is likely to become even more heated. While there are certainly risks associated with the issuance of a CBDC, there are also significant benefits to be gained, such as increased financial inclusion, reduced costs, and faster and more efficient cross-border payments. Ultimately, the decision to issue a CBDC will depend on a variety of factors, including the state of the economy, the regulatory environment, and the level of public support. For now, it seems that Israel's central bank is content to wait and see how the use of stablecoins develops before making any decisions about issuing its own digital currency. That's all for today's video on Israel's central bank considering the issuance of a CBDC. Don't forget to like and subscribe to Bitcoin Dorks for more crypto